What is up? What is up? What is up? Folks, thank you so much for coming today. Thank you for taking a little bit of time out of your schedule. I am Big Cheds. Today is Saturday, February 5th, 2022. Just give me a quick shout out in the chat room and please confirm if you can hear me, if the audio is okay, and we'll get this party started, folks. Hi from Austria. What's going on? Greetings from Turkey. What's going on, everybody? Let's see. Chad, hey, good to see you. Thank you so much. Good evening. Amar, great. Hi from Jordan. That's wonderful. Hello from London. All that stuff. Folks, you can hear me loud and clear. That's wonderful. Hey from Malta. And we got Iran, Malta. This is a worldwide thing. This is a worldwide phenomenon. I can't even spell that. Maybe I can say it. It's a lot of fun. So I have a wonderful guest today. His name is Scott Melker, Wolf of All Streets. I've done lots of stuff with, done work with him before on his channel, on my channel, and other people's channels. This is part of the long form interview series. Let's get this going on real quick. I'm on Twitter. I'm at Big Cheds. You can find our guest today, Scott Melker, at Scott Melker on Twitter. He's just a lot of really good information. We'll get into that. He's got a newsletter. He's got all sorts of really great series, right? So I've done, this is number 4. I've done 3 before this. And really, I want to hear what the guests have to say. I really try to get the best minds in this space. And so that's kind of what that's all about. If you're new to TA, definitely check out the tutorials. A lot of my questions that I get on Twitter, a lot of the questions I get on Twitter about how to set up my chart can be answered by watching those tutorials. And just as a quick reminder, I'm a founding analyst at bitcoin.live, the best-in-class educational platform for crypto. So if you're serious about learning, and that's where I would recommend that you go to kind of get started. So what's the deal? I'm going to do like 2 minutes. I'm going to do about 2 minutes on Bitcoin, and then we're going to talk to our guests. So, for me, I kind of saw the top coming. We've talked about that in the past with the ETF run-up and then kind of the nut top, really, that Litecoin bounce. And, since then, and that's all up here, and that's all in my public work on Twitter and on YouTube, and that's up here. And since then, we've been doing the mean reversion, the relief rally kind of deal, right? And it's always a question of when does a relief rally potentially turn into a trend reversion, or kind of a resumption, rather, of the uptrend here. We're watching for things. We're always watching for signs of a weakening force. And for me, it's been this yellow line, the EMA 34. Bulls have been unable to close above the EMA 34, which was rejected here in November at the height of that bounce, rejected here in December at the height of that relief rally, rejected just short of it a little while ago, about a few weeks ago, and then right here we closed above it. That's a sign of weakening bear force. So that's important. That suggests that we may be at the point where we're at least going sideways. You go downtrend, you have to go sideways before you can go back up. Maybe we're doing that. And really importantly is we've kind of gotten back up above 40K. That's a key pivot level. So if you wanted to go long, you had a very nice and clean, easy entry here when we broke above 40K. What we do next, anybody knows. We're still consolidating. Kind of for me, a bull thesis, maybe an inverted head and shoulders. Your breakout would be there, and your invalidation would be somewhere like in that level. So anyway, we can get into that another time. Let's get my man up. My man Scott Melker here. I see him nodding. What up? What's up?
What's going on? How are you? I got a weird shadow on my face. I can see that, but we're gonna have to deal with it. Does it sound all right? I look a little jerky on the camera for some reason.
No, it's good. It's good. Do you want to? I think we're good to go.
Yeah, let's do it.
It's So anyway, how are you doing, man? How's life? Florida, right? How's life down there for you?
It's good, man. This is a rare Saturday where I took an hour, but wife was like, "I'll watch the kids if you're gonna talk to Chats. It's cool."
Oh, that's so nice, man.
Yeah,
no, I do appreciate that.
She's taking over duty. I'm always excited to have a chance to talk to you, man.
Definitely. So let's I want to have you kind of walk through your charts too, maybe not this moment, but kind of get that ready just so we can fire it in. Why don't you start out as always, just kind of tell, most people know who you are, but if they don't, maybe they just a Big Ched super fan. That's not your name, man. That's Scott Melker. It's not
my name. Big Ched super fan. That's my name.
All right.
Oh,
so tell us folks a little bit about you, where we can find out about your work and all that.
Sure. I mean, you can find everything linked from my Twitter, at Scott Melker or the wolfofallstreets.io. But, for for a good 25 years, I was a casual trader, basically it was something that I did on the side. I literally bought my first stock when I was 13 years old. Disney and Caterpillar, both good trades since I'm still holding. And was superficially sort of interested throughout the years. When I was in school, I went to a school that was very heavy for finance, the University of Pennsylvania. And so it was hard not to at least catch the trading and finance bug a bit. But I was a professional DJ and music producer for about 20 years. I decided not to use that Ivy League education at all, basically, much to the dismay of my parents, I'm sure. But once I really got more serious about it in the mid 2000 teens and found crypto, that was it. So I spent the last 5 or 6 years basically doing it full time. A few years before that, I'd already kind of started. And from there, I had this like music following on Twitter, and I alienated them immediately and started talking about this crazy magic internet money. So I went from it was funny. I literally cut my fan base in half on Twitter. you see this big number now, but it was like 40,000 immediately to 20,000 when I stopped talking about music. And then for whatever reason, sort of built from there. I felt like Twitter was too short form for me. So I started a free newsletter. Felt like that wasn't enough. So I started a podcast. Felt like that wasn't enough. So I started live streaming every day. And it just has been this sort of domino effect of nonstop crypto all the time.
So has, music still obviously an important part of your life, I would think. And have you found that crypto has taken away from it, or it's kind of added on to it because the music's still there? Has it taken away from it?
Taken away from it, man. I don't know. I'm the kind of person. It's funny. I have a friend, Micah Johnson, who's an NFT artist, and he used to play professional baseball. He has Aku as his sort of NFT thing, and we always joke about this because since the day he retired playing baseball, he says he's never picked up a glove. He spent his entire life playing baseball, professional baseball player, retired, and has never picked up a glove. I have not touched my turntables right back there in 3.5 years. One time I picked him up and DJ'd my mother-in-law's 70th birthday party, which is something I wouldn't have ever done when I was an actual DJ anyways. And that's literally it. So
wow.
I don't know. I'm the kind of person who once I go deep down a rabbit hole, I'm pretty far, and I get all consumed, I guess. But I still listen to music all day, every day.
That's good.
I just haven't, whatever. But I am in the process, because I recognize this, of building a new music studio, which is happening and will be done in about 4 months. So I'm in a full on build. And so I do intend to sort of transition back into it, at least for my mental health,
I think that's really exciting. I see how you approach things and you take them seriously. You've become really good at this. So I can only assume you were also quite adept, and when you have a skill that you polish for a number of years and then you kind of put it on the shelf, it's a little bit weird, right? So I think that's great. I'm excited you're able to, dive back into that. And I see from your feed, your kids are into music. I see they play piano and all that good stuff. Is that right?
I mean, we just kind of dick around on everything, how it is. The stuff is around. So if kids see it, they're going to mess around on it. So both of them like to beat on the piano. And every once in a while, we'll turn on Ableton and they'll push some buttons and whatever. So yeah, but they're just getting to an age now, I think, where we can start to actually push a little harder and see what they're more interested in.
There's this
COVID obviously put a huge damper on a lot of it during the years when they would have kind of found passions, and everything just shut down. But that's obviously sort of slowing, so it's getting better.
There's this app called Simply Piano on the iPad, and I've been playing that with my daughter, and I'm learning chords, and I'm like, man, this is hard, and I can imagine you'd have to practice that stuff every day, many hours. And but it's fun.
Just like this. Just like this.
Just like
this.
You have
to practice this. Yeah.
Let's get this going, Scotty. I'm going to bring you up. I'd love for you to set the table for us, how we got here maybe over the last 2 months, and
sure.
What you think's going on. I'll drop you right up there, and let's see what you got.
Sure. So I will be the first to say that, like many people, I am guilty of the unforgivable crime of being too bullish near the top. I definitely was looking at 69K thinking we were going to get one of those monster Jesus candles, straight to 100, because things looked so crazy. And there were reasonable voices like you who were saying that things like that might not happen, and I think it's important also to very distinctly separate the two lenses through which I view everything in finance and markets, right? And that's the investor lens and the trader lens, right? So through the investing lens, don't care at all, right? I missed it as a trader. That's true. But from the investing lens, it doesn't matter to me at all. In fact, Peter Brandt once came on my show and he said something really wise. He said, I say to my kids, buy the best company stock and hope and pray that it drops 50% so you can buy some more. Right? Yeah. So if you look at this through a investing lens, I think you see a great opportunity with 10 years away in mind and not 10 days away in mind, right? So it doesn't bother me that we've seen this price. And I like to look back, when I see it and I miss, right? You obviously want to look back and see what you missed. But this time, I think, is less dramatic than what we saw in May. And it's amazing how fast people forget what happened only months ago. The bullishness just like erases all of the bad feelings. It's like having an ex-girlfriend who you really hate, but then like a year later, you start to remember the one good thing that was nice about her. Then you get back with her and you realize that you actually hated her the entire time. Kind of like that, And so we went from 60 plus to 30 in 10 days last May, right? 10 days.
Yeah.
10 days. This was a long sustained, and we didn't go quite as deep, right? And in fact, we're making a higher low right now, potentially, if you look at it that way, right?
Yeah.
And at that time, we had legitimate, they felt legitimate, not to me, but to many people, legitimate concerns at the time, right? You had Elon Musk, whatever. I think that's laughable. But China ban and China mining going offline was a legitimate threat to the entire core of Bitcoin, right? Like hash rate dropping 50%. Is the network going to accommodate that? What does it mean when most of the volume goes offline outside of hash rate, right? Talking about like these, if you're going to drop and China can't buy, where's our demand, right?
Right.
So like very legitimate concerns. And then of course, everyone jumping on the energy battle. Right. We all knew that was sort of hyperbolic, but it seemed very real at the time. Bitcoin uses more energy than the country of Argentina, et cetera, et cetera. Right. So we had this 4-pronged FUD attack that made for sort of a reasonable fundamental underpinning. What do we have this time? The Fed? Is that it? And the only thing that we have against us right now is maybe a temporary correlation with other markets that people think are weak, which is all underpinned by the Fed and money printing. And when you zoom out and think about the fundamental purpose of Bitcoin, crypto in general, but of Bitcoin, it's to fade that shit anyways. Right?
Right.
So I just think that this is and I said this, and I was saying this at the dead bottom. I'm not saying it is the bottom, but for now it's the bottom. But if anyone who was following me a week ago when this was bottoming, I was literally out over my skis saying that I was buying everything in sight. And that the fact that when I would post something even remotely bullish, people would say, we have to go down 100%. You're insane.
Yeah.
This cannot be the bottom means there's a very, if you can't even imagine the idea that it's a bottom.
Yes.
Okay. Right.
Yes.
Like if you're so far gone and your emotional bias, right? So I just think that we got overextended on the sell-off, right? So maybe this is just a bounce, maybe. Okay. I would say that once again, we're at a fundamentally strong resistance, and you're going to see people getting extremely bullish, right?
What's that resistance, Scott? What's that resistance?
42.
Okay.
42. I mean, look, let me find I could just draw it on this chart, I'm sure. But we've been at 42 with huge variation above or below for 13 months.
Yeah. Yeah.
Right?
I mean, it's a big zone. It's a big zone.
We topped there January, this week of January 4th in 2021. And that's where we are sitting right now.
Low of February, high of the rectangle.
Right. If you you could take every line off this chart and just look at 42, and that's been the support and the resistance, effectively that zone. Right? I don't talk in finite numbers, right? But that zone has been the top and bottom of every move, in my opinion, thus far. So of course we're going to get super bullish, just like we did right up here when price was topping at 53. And I literally was like sending tweets aggressively making fun of anyone who was getting super bullish at resistance. Now, I think actually the odds are we push through this time here.
Interesting.
And to say every single time like that we're going to die at resistance, well, then price can never go up, right? There has to be a point where people get bullish at resistance and market buy through that resistance. It's the only way it can happen.
Yeah.
Right. But my belief is that unless you truly fear the Fed, which is a dog and pony show of epic proportions that is completely fake and contrived anyways, so screw that. If you really believe that they're not going to stop money printing, then I've got a apartment to sell you on the moon, right? And they're not. They may slow it slightly for a little while and then resume right before the election, because if they stop money printing right now, everybody who's in office loses their job, and that's not how this works. And so if you believe that, that we are going to come out of this, then you should think that there's a good chance that we have bottomed, right? You have more balls than me calling tops and bottoms.
Oh, please.
I just call areas, but like 32,000 from 69.
Yeah.
Very, very reasonable, normal bit retrace for Bitcoin.
But how do we know? So, I mean, that's great. And by the way, great commentary. And I have all these follow-up questions. But how do we know how do we know we don't need 80%, Scott? Right? Isn't that what everyone knows? We do 80%. How do we know?
We know, right? We have to know.
We have to know.
We could. Listen, I talked to Sven Henrik the other day, Northman trader. I don't know if he's guy's just fucking amazing.
Yeah.
And he's, just became a Bitcoiner, and he's like, I'm starting to nibble now. But he's like, how much will people nibble if we're at 7,000 and it's done a 90% drop from 69? And I was like, oh my God, please. Listen, anything's possible. And I'm not saying we don't need a bigger retrace. I'm just saying that people are funny, right? You got a chart. And so I only use a chart as a trader, right? So, and I would say that I trade with 15 to 20% of my capital. So 15 to 20% of my opinion is based on the chart. Right. The other 75, 80, 85% of my opinion is based on sort of just common sense and my fundamental, like rational opinion. It's not on-chain metrics or earnings. It's literally common sense. Right. Common sense to me says we just saw $25 billion in VC flow into crypto last year, more than the 3 combined years before. We've already almost seen that much in February of this year. There is insane amount of money flowing in this space. And the worse shit gets globally, even if Bitcoin retraces with it at first, it will likely detach. If we're Bitcoin believers, it will likely detach and become more bullish. The other thing people forget and love to somehow just ignore, that people love to say, oh, everything crashed March 2020. There was this crazy correlation. Well, first of all, Bitcoin crashed March 12th and the stock market crashed March 23rd. So you'd have to believe that Bitcoin leads the stock market. So let's stop. Right? It's less than $1 trillion market cap at the time. It was way less. I mean, it was like less than $250 billion at that time. Right? Price was trading at $6,000. And people love to say, oh, they're correlated, and the stock market best run ever doubled. Bitcoin went up 17 times from there.
Right.
Went from 38 to 69. Right? So if you're going to talk about them both being risk off at the same time, what happens when the world inevitably goes risk on? Bitcoin crypto becomes the best trade on the planet, right? And it exceeds what you can get in other markets by many multiples. So if it goes down to 15 and you're buying at 40, but the end game of that is 150, you shouldn't care at all.
Right.
You literally shouldn't care at all. Yes, you can get a better entry. And listen, you and I have discussed this, right? Like you're of the mind, like, Michael Saylor, MicroStrategy should be looking for better entries. And that 15, 20% of my mind agrees. But if he doesn't have that mind at all and he's 100% investor, his goal is going to be, this shit's going up. I'm buying as much as I can whenever I have the cash. Right. And so he is not a trader. He's an investor. And I think that goes back to that sort of two lens view. But
Let me ask
we
you
could
though,
go down 80%.
Well, so, but is there a fine line between a trader and an investor, or is it, is it a gradient?
I don't think it's fine. I think they're actually leaps and bounds apart. And I'll tell you why.
Okay.
Because the people historically, our parents, boomers, the generations before them, the people who have made generational wealth in markets historically have probably never heard of technical analysis, or
Right.
probably do not even know that charts exist. They've simply taken whatever money they had that they weren't going to take back out to pay for something, put it into any market, and let inflation carry them to the promised land, right? Invest in hard assets, don't touch that money, give it enough time to grow. That doesn't work very well with the trader get rich quick mentality. But I think that most people, and Michael Saylor's in his 50s, right? And I think, a lot of people who've been business really just want to get their money into hard assets and not touch it, right?
It's the stress thing, right? You want to put money somewhere you don't have to babysit, right?
Yeah, exactly. And listen, the only invest money you have to lose shit is like the dumbest, most misleading, and almost like insulting comment that we all make, because nobody can afford to lose all their money, right?
Right.
But there's some truth in the fact that I would prefer to say only invest money that you can afford not to touch for a while, right? I think is almost better,
Is there?
reasonable say.
Let's dive into that, because that's interesting to me. Is it also maybe an amount that you can hopefully emotionally detach from, right? Because that's a lot of what it comes down to. Ideally, it's an amount maybe that you can't afford to lose, but that maybe you won't sweat, and then maybe you can play it properly.
I think overexposure is probably the number one reason that people make bad emotional decisions, right? When you see like the analysts that are staring at 1 hour charts and freaking out about the like macro implications of a small move that happened in an hour, you know that they're overexposed or overanalyzing, right?
Right.
And listen, everybody has their own time frame, so if you're trading an hourly chart, you should be panicking about what might happen in the next 12 hours, but you can't extrapolate that to have meaning for the next 12 years, right? And so I think that it's just, it comes with the territory. But you and I both love poker as well, right? I know that
Oh
we've
yeah.
also talked about this. So
Big
like,
time, yeah.
Doyle Brunson's super system, one of the famous things he talks about is not thinking about your chips as money, but thinking of them as units.
Yeah, oh,
Right.
big
And
time. That's a
so,
big one,
yeah,
yeah.
so mentally detaching from the amount of money that you're betting so that you can make the proper decision based on the
Yes.
pot odds of what you're doing and based
Yes.
on the opponent that you're playing. Right. And so you can't do that if your rent is on the line. You
That's a
just can't.
great point. That's such an important point that people ignore, and you're right. Like if you need your money to pay bills, I mean, pull it out and pay the bills. You can't trade with that stuff. And there's times when you should average down, even though it's a dicey proposition. But there's times when you should buy that really deep fear. Like if Bitcoin, who knows what happens tomorrow, but if it hits that weekly, MA 200, like in the next week, you have to buy that. Even though it doesn't matter how bad it looks at the time. Like you got to be buying there. Would you kind of agree with that?
Is that 20? Like that's like
200
20.
weekly 200.
Yeah,
Sorry.
I'm saying it's like 20,000, right? Like the weekly 200's around.
It's
Yeah, I think I got it
probably
right here.
around
That's
there.
it right here. Yeah, the weekly 20. Yeah. Oh my God, you buy that. So,
And like
and
over
by the way,
time. Yeah.
that's also like if you get that weekly 200 right there, that is the untested 2017 highs.
So right. So there's people
Never
watching this.
tested ever,
Never tested.
ever.
There's people who are watching this video who want to know if they're like, hey, Cheds and Melker, should we buy here? Because they want to be long, right? And because they feel like they missed it. But if it drops to 20K, they'll be scared. But that's when they should be jamming it.
Oh, come on. I'm buying at 53, hits 53. I can't buy. It's going to 42, hits 42. I can't buy this. It's got to go to 28. If it
Yeah.
misses 28, it's going to 20. You never buy, right? And
Right.
and when they buy 70,000
At 70,000. So how do you deal with
when
that?
it breaks resistance. I just
What's a good
I plug my nose and I buy. And you guys
That's
have
right.
seen it, and I
Yeah.
put it out there publicly, and I take it on the chin for it every single time for being an idiot. But I bought Bitcoin at 53
Yeah,
because
me
that was
too.
support. I bought Bitcoin at 42 because that was
42.
support.
Yeah.
And so it broke those supports. Oh well, it'll go back up, right?
But
But I have the patience, and I'm only doing it with the amount of money that it doesn't matter.
that's HODL. If you were trading though at 42, your stop loss would have been whatever, like 41 or 40. So
yeah, would have been like 41.4 or something like that.
41.4.
Exactly. But I was trading. So like I've taken 4 leverage trades since 69,000
Okay.
in a massive downtrend. I'm not saying that this is smart, but I don't like shorting Bitcoin. It's just something I generally don't want to do. And so they've all been longs. And I had one small loss and one, slight win and 2 massive wins. right? Because both of them were at the point where we were at support. It hit oversold or something with bullish divergence.
Yeah.
I got the immediate bounce that I was looking for, which is the way I trade. I moved my stops way into profit. And so
Boom.
like when it dropped, I made my money and I was wrong, right? So
Mm.
you don't need to be wrong or right. You need to be profitable.
Yeah.
Right. So yes. And people are like, and then so people see, oh my God, he longed. And then they come back a week later and they see
It's
prices
lower.
lower and like, you're
Yeah.
an idiot. And I'm like, I made like 6 months
I
of
know.
my life on that
That's
one
funny.
trade. So am I
Right.
an idiot? Okay. No. So as a trader, it's all about how you play it, regardless of if you catch it right or not. And as an
Yeah.
investor, okay, well, yeah, I'm holding the bag on Bitcoin that I bought at 53,000, but my cost basis on Bitcoin is under 10,000. So do you think I'm
Yeah.
worried? No. Right.
So how aggressively on your trades are you moving that stop loss into profit? You know what I mean? Generally, and that's a tough question, but generally
So I
speaking.
usually, it's funny. I don't practice what I preach, right? So I preach to people that you should have a exact plan when you enter a trade, right?
Right.
Of course.
Right.
And I say, I do believe you should have your stop loss 100% defined, right?
Oh yeah.
Of course, because you can't define your risk and you can't take a position size unless you know where you're wrong,
Right.
right? So, but if I know if it's an aggressive downtrend and I'm catching knives, which is what I'm
Yeah.
doing, I'm aware that I'm catching knives, right?
Right.
And so,
Yeah.
like, the odds are I did not catch the bottom of a macro move that's taking months, right? So, rationally, I'm aware of that. So, the
Right.
minute like I hit the first resistance, I'm taking some off the table and then generally moving my stop into profit. So, it's a taking profit and a moving stops into profit sort of situation.
Yeah.
And so, yeah, and so it becomes a really mixed bag on the way that I sell. Because like my plan is dependent on what happens after I enter in those cases, right? I mean, if it only bounces a little bit and then kind of hangs sideways, no, I'm not going to move my stops into profit. I'm going to sit there with my original plan because maybe it's going to come right back down to my entry and then rock it, and I'm going to get stopped out. I'll tell you for now. I was in long from almost the bottom here, 34.3 or something, when we confirmed that last major bullish divergence oversold down there.
Yeah.
So it bounced up, I don't know, 38, something like that. I sold a nice portion of it and I moved my stops up to just under 37. Right.
And then it got
And so
stopped out and
it
boom.
went down to 35.8, right? 35.7,
I had the
something
same
like that.
trade. I had the same
Right.
trade, man. I had similar.
But
Yeah.
I could have theoretically still been long right now from the bottom with
Right.
leverage, right?
Yeah.
And so, but I can't really beat myself up over that because
Yeah.
just as easily it could have gone 35.8, 34, 33, 31, and then I would have erased any of the profit I took loss, right? So I don't know. I definitely, if I'm trading, it's about minimizing the loss and taking what's on the table in front of me and not starting to get greedy. I really try not to do that. So yeah, maybe I missed the generational bottom and was long, and I'm going to be feeling like shit when it's at 100, but I'll also be paying, if it gets to 100 from there, the amount of fees I would have paid to be long during that time and through all the consolidation we'll see wouldn't have been worth it anyways. Right. I mean, for most of that time I was paying to be long. So it becomes a bit annoying.
I think that's great advice and good kind of risk management. What do you think about alts here, Scott? I mean, how do we approach it? The market's been, I think it's been a really tough market for alts. And,
I've been saying it for months. Yeah, I've had a pretty strong opinion on it for months, which is that, okay, I like to play the probability. So that's hard when you're tweeting or telling people things because they might read just one thing and think that that's your overall opinion. You need to take everyone's opinion in the context of the way they think. Alts could do exceptionally well, but I would say that probabilistically, statistically, the odds are that they will not do relatively well compared to Bitcoin. Or at least I was saying that on the way down, because these are so if you, right, we know how it goes, right? Bitcoin dominance, your worst case scenario is Bitcoin dominance dropping.
And everything's dropping.
Bitcoin dominance rising while the price of Bitcoin drops.
Oh,
Bitcoin is dominating more, but the peg is dropping, and your alts, Bitcoin goes down 10%, your alts drop 30%, right? We've seen a lot of that.
Yeah.
Then there's when Bitcoin dominance is, you know all the combinations, right? I don't need to walk through them, but the gist being that if Bitcoin rips up from here, or had ripped up from the bottom, which it kind of did, that's generally people FOMO into Bitcoin. Bitcoin dominance rises. Your alts do okay against USD, but secretly are getting absolutely raped against Bitcoin and you're just afraid to flip over and see the Bitcoin balance your portfolio, right? So you're better off in Bitcoin than alts. Why do more work than you need? If Bitcoin absolutely drops and dumps, you see the same situation. People sell their alts to get out of them and they perform even worse. And generally, Bitcoin sideways is good for alts. But the caveat is you want sideways consolidation after you're going up, not
Yes.
sideways at the bottom where people think it's going to dump.
Yeah.
So that people get
Yeah.
confused. Like Bitcoin sideways, it's chopping sideways. But when
Right.
there's fear in the market, people are not rushing to buy the riskier asset, right?
Right.
And so I think that the scenario for alts to outperform Bitcoin, and that's all I care about. I don't care about alts doing well. I care about them doing better than Bitcoin. And by the way, that makes it
Right.
harder than trading any other market. You trade stocks against dollars and you're fine. You're not also trying to outperform Amazon, right?
Right.
And so it makes it very difficult. There's very rare situations. So in general, I think that if Bitcoin is volatile, you want to be careful and just, I'm not saying like sell all your alts off. I'm just saying like, if you're trying to trade them, it's going to be really hard. In fact,
Yeah.
like, I mean, I very, very publicly bought a lot of Solana recently while they were getting fudded to death. I love that. Thank you.
Yeah.
Please tell me how it's going to zero, please.
Yeah.
You know, but I started at 116. Oops.
Okay.
Broke right through, but I
Yeah.
more than doubled down at 82. So my cost basis is sub 100 and it's back at like 115 today. Took
Nice.
me all of a week, or took all of a week for people who were calling me a retard to
Sure.
Right. So but I want to own Solana for a long time. Like I want to own layer ones because I don't know which one is going to win. And so I want some exposure to all of them because I think that something will win. That's an investment strategy, right? So I didn't put a stop loss on that. I started a position knowing I was willing to average down.
That's interesting. Those are some concepts there. Like price drops as a result of news or FUD are often great opportunities, and I think you kind of sensed that. So I think that's a good point. And you also kind of, for the viewers, you demonstrated scaling into a position. Right, you're never going to be able to nail that exact bottom, so you decided to break up your entry into 3 or 4 or 5 pieces, and you're able to get an even better position now with it turned around. Are you, not to betray too much, but are you in profit? Or are you still, you know, is your cost basis where it was, or have you moved it up? You know, your stop loss.
No, I'm not. I have no intention of selling Solana anytime for the next few years. It was one of the, and admittedly, there's 2 assets in the last like year or 2 that I felt like I sort of missed.
Okay.
One of them was Solana. It was one of those things where it like kept going higher and I was sort of like casually waiting to see a dip and it just never happened and it kept going and it just never stopped. Right. And so I missed it. I just didn't own any Solana. So when it was at 260, I was like, there's going to be a massive retrace here. I'm going to start eventually. And I waited till 116 from the top at 260. So yeah, it dipped to, what did it go to? 80. You know, right here. But these were my 2 targets. I've had these lines on my charts. I've shared them a million times. And at $80, we were massively oversold with bullish divergence on the daily chart. Right. So thank you. We all know that I love that. So like my cost basis is just under 100 because I bought more at 82 than 116. So yeah, and this can drop more. And I have bids at 58, right? So listen, but if I had been trading this and I had bought this, which is what I did on the daily, and it rusted right through, I would have stopped out that day.
Yeah, big
110,
time.
109, right? But it was not a trade. It was not a trade, right? So
yeah, I mean, that's an interesting chart. It could bounce, and it's one of those where you say, hey, that was kind of an obvious bottom. But it clearly has rallied, you know, right to the underside there of that, you know, that level and to the descending, you know, resistance as well. So it's good you have a plan. You know, you're not saying, hey, it's the bottom and you know, because if it goes lower, you won't be shocked, and then you'll be able to play it properly. I think that's good.
No, in fact, like I kind of want it to go lower so I can fill an entire position because right now it's not the full position that I intended to fill.
What Peter Brandt said, you're trying to follow the Brandt advice, right?
Yeah, but that's the beauty of, even with trading, you know, depending on your risk appetite and stuff. The beauty with scaling in and out of things is every single time, like, okay, you buy a little bit and then it skyrockets and you miss the rest of your bids, but at least you've got some skin in the game. You caught some, you can feel pretty good. If you're selling and you sell at resistance and it breaks through and it goes to the next one, sell a little more. Each time you sell, you're reducing the stress of all of your future decisions. And every time you have less money on the table, the easier it is to hold it longer and hit those upper targets. I think the biggest problem for people, and nobody wants to admit this, is that everybody like compares their performance to the best case scenario as if they would have been perfect, right?
Yeah.
So like they don't want to scale out. That's where you get the greed thing, right? You're like,
Yeah.
well, it's at resistance, but it's going to go higher. So why would I sell some here? But then if it doesn't, right, you may be a genius, you may not. But like I said, it reduces the stress. But then say you scale out all the way to the top, then you go, God damn, I could have like sold everything right at the top.
Oh, I hate it. Oh, I hate it.
I lost so much money.
That's right,
when
right?
you made like the trade of your life, and your like life view is that you like lost some opportunity cost.
Right.
And it's just not the case. And so it's the same. I love to like do this thought exercise with people and say, so, okay, let's say that you like, you started with $1 and you made $100,000 in crypto. Amazing. Right. And so that $100,000 goes up to $1 million. Okay, so let's say January 1st, 2021, you had $100,000. January 1st, 2022, you had $1 million, right? You did another 10x. Your portfolio gets destroyed, like mine, in the last 2 months, right? And now you have $400,000. Did you make money or did you lose it? And inevitably, people go, I lost $600,000.
Yeah. Okay.
Right?
Yeah.
They go, I lost $600,000. Like, and that is based on the thinking that you would have been perfect and sold literally everything you had. You wouldn't even had the liquidity, let's be honest, but you would have sold everything you had at the dead top. Right. And so your portfolio, like a chart, honestly, I think you should be happy with higher lows. Right?
Isn't that true? Isn't that a great point? That's really a great point, right?
Yeah.
If you're looking at
Yeah.
So what, we'll wrap things up pretty quickly. It's the weekend and you've been unbelievably gracious with your time. It was like a last minute thing and you're like, hey man, no problem. I'll come. So thank you. You're definitely a wealth of knowledge. So if you're, I'm not in Bitcoin, I'm not in crypto, but I really want to get into it. How should I approach it here? Should I just dollar cost average? You'd probably say, yeah, of course, DCA. But let's say I want to try to make a trade. What should I watch out for? How will I know bulls have regained momentum here in the short term? What do you think?
Okay, well, I mean, if they know how to look at a chart, which they probably don't. I know you hate descending lines, right? And I don't blame you. For me, a descending line is a signal that things could be reversing, but it's not a tradable entry or exit. So that's how I like to view it. So like in this case, right? If we break this line, I'd be looking for a dip back to 42 as the buy, not the break of that line, because we inevitably know that it breaks that line and then dips all the way back down and takes you out. You get destroyed, right? Yeah. But for me right now, listen, 30, like how for me breaking 53 here on this candle, this was the signal that we were going to go way up for me.
The macro lower high from the weekly equilibrium. 53K.
Correct. So we broke that lower high, right? And so sort of violated bear market structure, became bull market structure.
Yeah.
Well, for me, look, we had, we can go back, God knows how long, it doesn't even matter. But look, low, high, higher, low, higher, high, whatever, right? Yeah. So from here, we have this sort of bull market structure, right?
Weekly 50.
Well, that's violated when we lose 42, right? Because this was a lower low. So if we can get back, or excuse me, 39.6. If you're using Wix, right? So now we're above that. So that's a really good sign to me because we're now in violation of this kind of, we had made the higher low and we broke it. Now we're above it. If we flip 42 here, so I think like if you're new right here, you're certainly fucking not buying this at 41.6.
Yeah, it's tough, right?
Unless you have 100x leverage with a 42 target and a stop loss at 41.4, right?
Right.
But you're not. You're looking for this. Like, you know what I mean? Like this is your entry, in my opinion. If you're not a breakout trader, if you caught 39.6, I don't know. Like if you caught 39.6 on the break, great.
Right.
Maybe, and honestly, maybe. So if this does get rejected, by the way, and you're still bullish, then I'd be looking for this trade, right?
So is that a 46K rejection or what? I mean, I see 46 as a big level too, because that was the support that we lost too.
I have it somewhere, but like, I don't know if I have that chart open on here, but I have, I had one that I posted on Twitter earlier today, which has the daily levels. And to me, it was like 39.6, 42,
Yes.
45.5.
Yes, exactly.
52 or 53, and
Right.
then I mean, if we're above 53, we should be at 100.
What let me get you on the record here, Ethereum. You see ETH, BTC, and what I talk about at Twitter and Bitcoin Live is the idea that Bitcoin bulls want that chart, ETH, BTC, to be going down, right? Because when Ethereum's outperforming Bitcoin, it's not Bitcoin time, right? What are your
Yeah.
thoughts on that? ETH, BTC, and maybe ETH real quick, and we'll wrap up on that.
So I mean, ETH USD right here kind of looks better than Bitcoin, frankly. Like if you're looking at on the
Yeah.
USD chart, because this would sort of be the equivalent to the level, and we're above it already.
Mm-hmm.
So maybe holding $3,000 is a big deal. I think 29, 28, but I think that's a
Psychological
big
too.
deal. But maybe then we head to 33 something. Now
Mhm.
listen, ETH BTC, another one. You zoom out. Ethereum
Hmm.
has been smashing Bitcoin since 2019, like
Right.
annihilating it. Right.
Right.
And so
Yeah.
I don't think that trend is changing anytime soon. Right. And
Mm.
if you're trading the diagonal, well, that didn't break out until, almost a year ago.
Okay.
Now listen, but I'll be honest, this is what I had.
Yeah. Yeah.
Right.
Right.
And
Kind of.
so I expected that we had sort of listen, technical analysis ain't always science, so I had sort of this,
Yeah.
I can't get it now.
In the height of it.
Uh,
Yeah.
Yeah, and so, like, obviously, you pull that here, and
Yep.
right, you're on a log chart. You're up at new highs. That
Right. Of
didn't
course.
happen. But I also said, like, I saw this rejection here, so I thought we would stop back here on a
Right.
retest of that, and I was
Yep.
wrong. It's gone deeper. So now, to me, we have sort of this ascending channel. So I don't know,
Okay.
but like in general, I believe that Ethereum will outperform Bitcoin for a very long time. If I was investing, I think that Bitcoin is the better, more important investment. I think it has
Mm-hmm.
a better narrative, the hedge against inflation. I think that that's the one that will stick. But I mean, listen, if it ain't broke, don't try to fix it. And it's
Mm-hmm.
been 2.5 years of Ethereum outperforming
Right.
Bitcoin. And so I think that, I think what we'll see is this sort of rocky road.
Yeah.
Bitcoin, if let's say that we're back in a bull market, right? I'm not
Okay.
saying that, but let's suppose we're back in the bull market.
Yep.
Bitcoin rips, this kind of trades sideways or dips a little more. But then when Bitcoin consolidates, Ethereum's next move is bigger than Bitcoin's move was.
Yeah.
Right.
Right.
So when Bitcoin consolidates, Ethereum outperforms its bull runs more than Bitcoin's relative to Bitcoin's bull run.
Right.
So they both do well, but this one maybe does 10% better, something like that consistently. That's sort of how I see it. I think there's a lot of catalysts for Ethereum,
But
in the coming. Yeah.
Scott, if you're DCAing, why aren't you? And maybe you are, but why don't you? And I think about this for myself. I mostly just hodl Bitcoin and Ethereum, and I wonder if I should be doing more Ethereum than Bitcoin because I'm looking at a chart like you're showing me that shows that outperformance over time. Why are you not accumulating more Ethereum? Or
I
you
am.
are? Okay.
I literally, so in very small amounts, I literally buy Ethereum every single day.
Okay.
So I manually, like, weekly buy small amounts of Bitcoin, and I go in huge on dips, right? When I have dry powder, I try to like time Bitcoin a little more.
Yeah.
Ethereum, I use a platform called Roundly X, which is, if you know Acorns, if you've
Yeah,
ever
I've heard of Acorn.
which takes
Rounds
like you
up
buy
stuff or
90,
whatever.
yeah, rounds up. So you buy 90 cents of something, and then it rounds up to $1 and buys 10% stock, right? 10 cents of stock. So I use Roundly X with a 10x multiplier. So it rounds up everything and then multiplies it by 10 in conjunction with Voyager. So every time it hits like 10, 20, $50. So like I'm buying like 40, $50 of Ethereum a day, just like passively in the background.
Okay.
And then earning interest on it on Voyager, where it automatically buys it. Oh my God, that's outperformed almost anything. I've been doing it for years. You
What are
can
we
see what
talking about here?
Ethereum's done.
Really? I'm gonna have to look into that, huh?
Oh God.
So you hold your ETH on Voyager and you get
and you get like 5 or 6% interest on your Ethereum, which is it's equivalent or outperforms staking in the ETH 2.0 contract, and it's liquid, right? You can get it out anytime.
It's like a Verizon yield. It's like the same yield as Verizon, but it actually goes up.
But I'm starting to feel like I also need to be dollar cost averaging into Solana, AVAX.
I see.
The bigger competitive layer.
Give us a couple other ones in that tier that you might be thinking
listen,
about.
I'm boring, right? So like, as much as like, I love myself some shit coins, right? And I love trading that stuff, but I try not to talk about it too much at this point because I just, following's too big. But like, I think that you should my general thesis now, and I love that Fidelity just put out their report Bitcoin first and made this sort of like very obvious to me but surprising to many premise that you should have Bitcoin and everything else, right? I've been saying for a long time I think cryptocurrency is a massive misnomer and we need to eliminate that, right? Because most of them are not currencies. Maybe crypto assets, right? Because you say digital assets and then you have to include MP3s, right? So crypto assets.
Right.
And so I think that there's Bitcoin, which has solidified itself as digital gold, store of value, whether it's performed as one or not, hedge. And then there's kind of everything else, which are like tech investments. So there's like Bitcoin, which is like buying a better version of gold.
Okay.
And then all of these other ones, which are like investing in the stock market, like buying Amazon, Google, Apple, Facebook, Meta, whatever the fuck it's called at this point, right?
Yeah, right.
And so, which I literally like plugged my entire face and almost puked and bought.
You bought some
Facebook stock.
Oh, I got calls, brother. I got calls. I mean, it's a good spot. Weekly 200, right? It's the same thing I said.
Weekly 200 have erased almost 2 years of price action.
Yeah, come on. Yeah, buy the blood.
So, and so like, you know, you have this sort of other basket. And so in my mind, you have Ethereum, right? Which you have to have exposure to. And then if you're going to go a little bit down the risk chain, I don't think Ethereum owns the entire layer one world of DeFi, NFTs, metaverse, whatever the hell else GameFi that we come up with. And so I believe my thesis is that we'll live in a multi-chain world. They'll be interoperable. So you want to be invested in the multiple chains, at least to some degree, like small exposure, and anything eventually that makes them interoperable or faster. Right. So to me, like, people love Cardano. That's a good one for if anyone believes in it. I don't, but like, it is a layer one that has a lot of hype. But Luna, Solana, AVAX, Elrond, One, Near, like choose whichever ones you like. Get 3 or 4 of them, right? And because one of them will become the NFT chain, one will become the gaming chain, one will become the metaverse chain, and then the next, if you want to go one step further, start looking at things that make those chains actually scale and faster. Because if we're being honest with ourselves, none of them are remotely scalable for mainstream adoption, right? Solana is supposed to be the fastest, whatever. I love it, but look how many times it fails, right? So Polygon, right? Matic, anything ZK rollups or you know that helps make those things faster, like Metis DAO, if you like that one. Polygon, Horizon is both interoperability and ZK Snark. So like I like to touch on all of these. Atom, of course, Cosmos, right? The interoperability dot.
Yep.
Kind of a layer 0. So yeah, I have exposure to all of those. Wow. They're not like they're all like a percent of my portfolio or less, but like one of them is going to 100x.
I love it. That was really good.
So if the rest go to 0, fine.
Yep. That's, you know, I read in one of those textbooks something about holding a diversified basket of risky assets. And that's what that is, right? One of them is going to just 20, 30, 100x. Yeah.
Right. That's not diversifying for anyone who wants to talk about diversifying, because they will all die together if this die, right? So there's like 2 funny schools of thought, right? There's the like, don't put your eggs in one basket, like the famous statement, right? Which is for diversifying your wealth, own a little bit of everything if one thing crashes. But they all have systemic risk if you're buying a bunch of altcoins. So what I prefer to say is put all your eggs in, which is Buffett, I think, put all your eggs in one basket and watch that basket really carefully.
Yeah.
Right? And so I think that that's sort of an important way. You just can't have everything, like literally every penny in. You see, Bitcoin like could drop a 10,000 and every one of those will go down 80%. And you know, so it's all about portfolio structure and sort of how you approach it. But listen, like Mark Yusko said this to me. He said, listen, people say to diversify, but that's for people who are already rich, right? You don't get rich. You don't get rich by diversifying.
Right.
You get rich by being like super hyper focused on one thing and being right. Yeah. And so diversifying is for rich people. And that's funny because also storing value is for rich people. Right. We talk about Bitcoin as a store of value, but you got to have value to store before that really matters. So, yeah.
You know, the whole market's driven, and we'll wrap up here. And again, thank you for your time. But the whole market's driven, a lot of it's driven by people who want to be rich and people who don't have a lot of money and they want to buy the next Bitcoin. They want to be able to diversify. They want to be able to do all those things. And but we're all in the same pool too, which is interesting, you know. So we see all those market participants, and it's a really interesting ecosystem. So I think that the advice you've given is great. Man, I love having you on here. I love listening to what you have to say. You were talking about like fruit roll-ups and stuff. I've never heard of that before. So, but no, I have my nose in the chart, and so it's refreshing to hear from other people, and all that. So the chat room loves you, and it was just fantastic. Is there anything you want to finish up with, to say to people? And you know, let's hear from you. What do you got?
That's really it, man. I think that you just need to shift your view, like you just said. Like everybody wants to find the next Bitcoin, but like
Yeah,
you probably won't. You probably won't, right?
yeah,
So I just don't enter with the expectation that like you're going to get rich really quick.
yeah.
Just enter with the expectation that you might get rich really really slow, and because I think you will if you don't be a degenerate and trade it away, you know. And I think that just trading is kind of just not for most people.
Right.
But all I can say is that like, and just don't feed into the like emotional roller coaster that is this community. It's a great, amazing
Mm,
community, but
mm.
no one of us is particularly more clairvoyant than the other. You know,
Yeah, right.
we're all just guys out here trying to like share our best educated guess at what's happening based on the information that we have.
Yeah.
And at the end of the day, you need to be accountable for what information you choose to absorb and which information you choose to throw away. But the easiest way to handle this is if you believe crypto is going to go up, just buy some and wait.
Mm. That's it. I think that's great advice to wrap it up with. Be careful with the hero worship, and learn to be reliant on yourself. And you can listen to what other people say, but take note of it and really come to your own conclusions, and kind of stand or fall really on your own 2 feet. Man, I love it. I love you. I hope you're doing well, and
Thank you, man.
hope you have a great
Sentiment is
weekend.
very much mutual. You're the only person I'm showing up for on a Saturday. So
Ah, well, that does mean a lot. So thank you so much. All right,
thanks,
buddy.
Chad.
All right, we'll
And thank
catch you
you
soon.
all.
All right, that is the man himself. He literally was like, "Sure, I'll rearrange my schedule and come and talk to you." It is Scott Melker on Twitter, at Scott Melker, Wolf of All Streets. He'll be at 1 million followers soon, which is awesome. He deserves it. Got his newsletter. He's on YouTube as well. Check out everything he does. You'll see all those links on his Twitter feed. I am big. Let's do a little tiny bit of Bitcoin. I'll wrap it up. So, um, what do we think? And by the way, thank you to each and every one of you for coming. The feedback has been great in the chat room. Uh it's been an environment where it's hard to be um excited as a bull, because it's just the mean reversions. We know what we're doing. We're bouncing to resistance. We're bouncing to resistance. And in my view, we have the first suggestion that we may be building some bull momentum, because we have the EMA 34. We're closing above it. If we can maintain above 40K, first of all, if you wanted to go long, you could have just gone long at 40K. You want to think about those big psychological levels. Anytime you have a trade, you want to ask yourself, how can I structure the trade to make money and not lose too much, right? You want that asymmetric risk. So we're doing all this stuff below 40K. You can just say, listen, if it gets above 40K, I'm going long. And then no matter what happens, that's my stop loss, maybe at 39.7 or 39.8, just below it. That's to say a $200 stop loss, as long as you have at least a $600 or 3-to-1, right? A profit target, you're doing well. That's asymmetric. So asymmetric risk to reward. So we passed 40K. If you wanted to go long, you could have very easily done that. That's a big psychological level. If the chart continues to hold 40K, we're all set. It's just going to build a base and push higher. Bulls would love to see, a head and shoulders here, an inverted head and shoulders. And if they do that, it would invalidate, which means if we break back below 40, that would be a sell signal. And if it confirms, up above maybe that 44K range would confirm that. Um, you want to not focus too much on patterns, though. It will confuse you, and you'll be trying to, is it a cup and handle? Is it a spoon and a fork? Is it a rising diagonal wedge, diamond, whatever? No, horizontal levels. All right. Big level here, underside of support that's now broken. Any bounce is going to reject there, most likely. All right, 40K. You want to get above